Previously, I spoke about potentially investing £30,000 on Apple, Facebook, Google or Amazon on the Q2 2020 earnings. In this video today, I'm going to share with you what I've done last Friday just passed, what I've bought, and also Q&A session with you viewers. A couple of you that asked me a question I thought I'll potentially reply to you directly, hopefully to help in your journey. So stick with me in this video, I'm sure you'll like it. So welcome back to Family Investment. Like I said in the last video of the Q2 earnings of Apple, Facebook, Amazon, Google earnings report, which one I would be buying, I said 2 to 1. And today I'm going to reveal to you what I've bought and also a Q&A session on to discuss about the same topic as well. So what have I bought? What have I bought? So between me and my wife discussed, money put in, various accounts and stuff. So as you can see, we've bought Apple, 20 Apple shares on this account, and then followed by another 35 Apple share on this account. So it's about £6,000 and £11,000 on that account. Because I'm based in the UK, everything's based in pounds. And then also we bought 5 Amazon shares, about 12,300 over pounds. So it comes in a total of 29,000 pounds, worth almost 30 grand of Apple and Amazon. So it's almost a 2 to 1 split. But also if you look at that account as well, on this account, I already bought 15 Apple shares when it dropped a few weeks ago. When it started dropping, I bought Apple shares, and then we're just going to be putting more Apple shares. So Apple shares is one of the biggest holdings, and Amazon we only manage 5 because Amazon is about £3,000 to £4,000 each, and it's quite expensive. We're hoping to buy more. The main reason that we bought Apple is because of the great earnings, the great future, 5G like I spoke in the last video, and also the stock split where it's going to bring down from 4 to 1. So if Apple ends up $400 and then get a stock split, divide by 4, and then it'll be $100. And I think Apple is looking, again, the main reason is to make it affordable for people to buy their shares, and this is the 5th time they split it, and plenty of room for growth. And I'm not going to shy away, but I like Apple as a company. We all use Apple as a company. I know I mentioned that we shouldn't be loyal to a stock investment, but personally I use the brand a lot, I use the product a lot. Not everything I like, but as a quality control, the product quality, I really like them. And same for Amazon. And another thing that I would like to add about Apple is I've always been an Apple shareholder. I've been an Apple shareholder almost the day when I first started investing. It's been up and down. I sold Apple during the COVID-19 back in March. I wholly regretted letting Apple go. But again, everybody was fearful. Everybody was scared. I was scared myself that I could have lost my job because I work in oil and gas, things were getting really bad, and hyperinflation, all that crazy stuff that you're thinking about as you see the market falling back in March. And I let it go. I can show you that I have sold. As you can see on this chart here, I sold Apple shares on the 19th of March. That's when everything went bonkers. People say put cash under your bed. So one of the account I sold 26 Apple shares at 5,000, and the other one I sold 17 Apple shares at 3,661. Imagine I held these shares and how much would it be worth? Now I'm spending so much money to try to buy them back, and now 26 and 17 is what I owned back then. Sold them off, and what made it even more painful is when you look at the next chart. When I bought them, I bought this 26 Apple share back in 2015. They were only worth $114. $114, okay? And back on the 10th of 11, 2015, the same time I bought Apple shares, and I bought 17 of them on my my other account at 116. So I bought these stocks really, really cheap. They were almost under £2,000, and I sold them, made a profit, but it went even higher. So like I said, I know Jim Cramer says this every time, don't trade Apple, always own Apple, always believe in them. Apple's gone through ups and downs. I never let them go, but COVID-19, I panicked. I really panicked, and I let them go. It's a huge mistake. I put my hand up, invested myself. I do make mistakes as well. And now I'm rebuying them back based on really positive sentiment on the stock split and share split. And don't ask about Amazon. I don't even want to go there about Amazon. And now I'm going to do a bit of a Q&A session, you know, me coming up this far on my Facebook channel and on my YouTube channel is, you know, down to you loyal followers who comes in, watch my video and then question and share information. I really appreciate you all. So I want to thank you all, my followers on YouTube and Facebook. So I've picked a handful of questions just to help you guys and answer face to face. So there's two on my Facebook that was been asking. One is Chi Wong and Edward Bobby Jimenez. And they asked, is this a good thing or bad thing? Will this be a good buy? Basically referring to the Apple stock and Apple stock split. My personal opinion, yes, I think it's a good buy. A company whose stock splitting is indicating they want people to invest. They're looking for growth. They're still looking for growth. So in my personal time, the last 8 years investing, I have one stock share split with, oh no, two in fact. One good, one bad story. So one was Nike. It went 2-to-1 split. So about $100 dropped to 50, and now Nike has gone back to about 90 or $100 again. They're still growing. And one other one was a failure, was Under Armour. I think Under Armour went to a stock split, a weird one, you know. Suddenly they went from 70 to 35, and then from 35 they've been dropping all the way to 10. I made loss on Under Armour, but I made gains on Nike, which almost cancels them out. So it doesn't mean that a stock split is a guaranteed success, but it's an ambition of the company for future growth. Okay, and the next question comes from Lee Buck, you know, another follower on my Facebook and my and YouTube. And hi Lee, how are you doing? So he said, does that mean that we should buy Apple stocks now? All I can say is I'm buying now because I want to get in. This is not going to be my first buy. I'll be buying again and again as I can afford for future for my kids. And you know, I'm looking long term, 10 years, 15 years. You know, my kids are you know, under 10 just now, and hopefully when they go to university, they've got money in the kids' eyes. So I'm looking long term in that aspect. And you know, I'm buying now. If they drop, I'll still be buying. It's one of the stocks I'm confident buying when they drop. And the next question comes from Lord Quas. I think this is from YouTube. Oh, and do price usually drop before a stock split? This one is, I think personally, I think the price will be volatile from now to August, because now we've got like Robinhood investors, we've got, you know, big fund managers. But think about it, 10% rise in on Friday. That means there's $150 billion being pumped in. It wasn't from us putting money, it was from institution. It was potentially Warren Buffett us might have put in money in. It was from big money funds. Sovereign wealth fund has been putting money in, not just the feds. A lot of people put money in. It's going to be volatile. It's still going to go up and down, but Apple is looking to get the stocks at $100 by 1st of September. So potentially between 400 to 420 might be the mark, or 380 to 420 might be the mark to buy in. If it goes above that, I think it's a bit high. Next question from Matthew Davis. You know, hi Matt, how are you doing? Do you know how stock splits work with fractional shares? Yeah, so straightforward. Even if you own a fractional shares, like let's say 0.1, stock splits to 4, so you get 0.1 times 4 shares, and then equally you get the dividends as well. So you get 0.4 shares times the dividend which they pay out until it becomes a whole number. So yes, they just basically divide by 4. It's pretty straightforward for that one. You don't have to pay for anything, no fees whatsoever. With you know, if you're using Trading 212 or Robinhood or Webull, there's nothing changed on that. And the next one is Joseph Larty. What platforms are you investing that £30,000? Trading 212 or HL? I do get asked a lot because I've released a video previously saying I've quit Hargreaves Lansdown. So don't misunderstand, maybe there's a bit of misunderstanding. I'm still Hargreaves Lansdown with my last 7 years ISA. And only this year I've tried Trading 212 because I know about the volatility, and you know, it's good to just swing trade. It's cheaper with Trading 212, but I still use both. It's just on separate vehicles, years ISA. So for this account, yes, I personally use Hargreaves Lansdown. £30,000 is a lot of money. I trust Hargreaves Lansdown better in terms of security. If anything goes wrong in the trade or anything goes wrong, stock split, I need to pick up the phone, Hargreaves Lansdown will be there. You try picking up the phone Trading 212? No. You have to drop them an email or a text or Twitter. They will reply to you. But for something that's big lump sum amount, I know, I still trust Hargreaves Lansdown. Yes, the fees involved in this $30,000 payout was a lot. I would say I think I paid about £250 on fees. It's a lot, but this is for the long term. If I'm investing long term, large sum of money, if I'm investing more than £5,000 on each trade, I got Hargreaves Lansdown. If I want to swing knowing that I'm going to sell it in 6 months, 8 months time, I got trading 212. So I hope that's clear. That's my strategy. You know, I could have gone cheaper with other brokers like Interactive Brokers or IG. I trust Hargreaves Lansdown. I've used them many times. You know, that's genuine from the bottom of my heart. Okay. Still looking for a broker? Don't wait. Join Hargreaves Lansdown. I use it for my family, my pension, the kids' investment, all in one basket. It's a really good company, great security, amazing products. You'll not regret it. So join Hargreaves Lansdown today. Next question comes from Thomas. I'm not going to pronounce your surname Thomas. I might call it wrong, so I'm using Tom. Hi Tom, how are you doing? Tom here, you know, says, are you going to wait for pullback after the big run before the stock split? Are you looking at split bump up from Robinhood? What do you think? I full position from April, might suggest to buy from my son. So firstly, yes, April, hold it man, hold it tight. Get your son to buy as well. You know, Apple stocks, you need to own them. And Tim Cook is doing a great job. I've watched every single of his earnings, and you know, no doubt, honest, high integrity, high quality products, you know, hold, buy. Are you going to wait for any pullbacks in the week run? If there's any other pullback, I would wait for at least a 10% pullback before I rebuy in. I'm not going to start averaging down, because again, you know, I buy this on my, you know, my other higher fees account. So only if they do pull back 10%, then I'll trigger buy one. If they pull back another 15%, I'll trigger buy second round. So this will be my strategy, and keeping cash will be key as well. I'm trying to save up. I think that's the other big thing. So big lump sum gone. I'm trying to save up for this, because Apple is not only what I'm looking at. I'm also looking at semiconductor, which I hope to share with you guys in future. Semiconductors, and a big one that I need to get back in, like Nvidia, you know, which I sold. So that's my strategy. So I hope that's useful for you, Tom. And now my last comment that I can put my time to is Anthony Coop. Anthony, how are you doing? Loyal follower. Thank you for your contribution each time, and your comment is really heartfelt. You know, you not only, you know, you watch my video, but you care about me going in £30,000. Yes, Anthony's right. He says he rates Apple highly, but he's concerned about the US and China relationship. You know, China and Trump with the embassy. You know, like kids. You know, I close your embassy, you close my embassy, and next, who knows, he might close Apple stores, because Apple, most of their making earnings comes from China. They're loyal followers in China, with Huawei being the #1 phones now. And Anthony Coop, you have a genuine point, very strong point, and you viewers out there should listen as well. So there's an element of risk. They're not invincible, they're not superhuman, Apple. They still could get harmed by politics, and there's a risk factor. As it stands, Apple is in the good books of China. Apple and Tesla, the likes of Google and Facebook, they've been out the window long ago. Netflix, they are still a bit, they might lose their spot. Spotify, they might lose their spot. Apple and Tesla are still in China's good books, good loyal followers. But yes, if anything does happen, it will impact Apple properly. Look back at the results back in 2016, 17, 18. The reason why Apple was under $120 is because of the Chinese growth. And then potentially, if anything does happen, yes, you know, pull the pedestal, it will fall. So you viewers out there, you should listen to Anthony as well. There's an element of risk, but as for now, it's okay, but it depends. Elections coming up as well. So we don't know if Trump might just turn around and be good buddy friends with China before election, after election. We don't know. Something we cannot control, but something that we have to put at the back of our mind. So thanks, Anthony, for your concern and sharing your views with us. That's the end of this video. I hope you enjoyed it. I know I have 30,000 more less in my pocket now, but all invested in Apple and Amazon. I trust this company. I feel more comfortable that my top few stocks are higher with this big tier tech stocks. I've always been a tech investor. I know I've still got Pinterest and the Ubers and the likes of Fiverr, CrowdStrike, but these are my big key ones. And you know, hopefully to share with you more in future. And follow me on Facebook. I update every time. Follow me on Patreon. And the next one that I'll be focusing on, like I said, is semiconductor. Yes, semiconductor is one that I need to look at closely because of Nvidia growing, Intel falling, AMD winning market shares, and also the most important is ARM. SoftBank owns ARM. They want to offload it to somebody, so it's a tug of war between China and America, and also ARM are the new chips that's going into the new Apple iMacs and Macs. So this is one that I'm watching closely. Opportunity, yes, do not miss this. So see you in the future, and yeah, see you soon. Have a good day. Bye.